Welcome to the Money and Wealth Show, brought to you this week by American Manganese Incorporated. Here's your host, Sterling Fox.
Welcome to the Money and Wealth Show, the program that offers you opinions every week on the economy, business, and the markets. This week, a man with a lot of opinions about money. It's a real pleasure to welcome the President and Chief Trading Officer from Black Swan Currencies and Capital, Jack Crooks, joining us from Palm City, Florida. Jack, welcome.
Thanks, Stern, for having me. Appreciate it.
It's a pleasure to have you here. You're in Vancouver because you spoke recently at the World Outlook Conference as a featured speaker. What did you tell folks?
Well, I told them that initially that the U.S. dollar isn't going away. The dollar represents the world monetary system. It's the core of it, and this hype that for some reason we're seeing more and more of, that it's just going to disappear every night and China's going to take over the financial world. I wanted to lay some facts out to show that that's just not going to happen for a very long time. At least that's our expectation, for a lot of good reasons. And number two, just to talk about some trade ideas, some setup ideas, things that we like, things we don't like relative to what's going on in the global macro environment, trades that they can make, longer term trades in foreign currencies that make sense based on a couple different scenarios that we're going to lay out.
Well, our guest is all about making money with money. You would treat money as another investor might treat gold or grain or copper or any other commodity. Money is just a tradable commodity in your view, right?
Absolutely. We talk about it as just being another alternative asset class. You have stocks, bonds, commodities, and currencies really can stand alone if you use them the right way. Most people think of currency trading as very short-term and risky, but it doesn't have to be that way. It can be a long-term, low-leverage, strategic play on things that go on in the global economy, give yourself protection, safe havens, things like that.
Why is it that money and the notion of being a currency trader is kind of alien to most people? It's not something that sort of is in our view very often.
No, it's not. And part of that is that whole North America, they're not used to having to go across borders. If you're talking about other places in Europe, they're much more comfortable with trading currencies because they had to do that especially before the European Union was there. So they just haven't had to do it and think in those terms. They've had to think very egocentric, especially in the U.S. With the U.S. dollar as a world reserve currency, there's not really a thought. But now with more globalization taking place every day and everybody getting tighter and tighter, I think people are starting to understand the dynamics of currencies can really play a big part of investment success.
And you hail from Palm City, Florida, so you're an all-American kind of guy. If the greenback is the world's reserve currency, as you suggest, Jack, why are there so many people out there trying to convince us all that the U.S. dollar is about to go under for good?
Well, part of it is some of the reasons that they think drive currencies. And ultimately, the U.S. dollar is backed by the faith of the U.S. government. And they see the U.S. government just acting like a bunch of drunken sailors, to say the least, with their money. I mean, just really irresponsible. And they think, therefore, the dollar has to go away. But this is a long-term process. You have to have other choices in the global monetary system. The dollar represents about 2/3 of all holdings in the global economy. About 67 currencies are pegged to the dollar. It's really the major player. Most commodities are billed in dollars. That doesn't go away just because an economy gets into trouble. There are a lot of reasons the world reserve currency is in play. The U.S. being the deepest capital markets in the world, provided the defense shield to really everybody around the world. All those things come into play. But people see the warts in the U.S. economy and think, well, it's going to go away.
Well, they see Mr. Bernanke and his cronies at the Fed essentially printing money faster than most of us could add zeros to a computer readout of dollar values, and say this is eventually going to cost America a high price. This is going to create inflation, which will ultimately weaken the dollar. It just has to. There's too many dollars out there.
And that may be the case. The dollar may go lower, may be weakened. But a weakening dollar and losing its world reserve currency status are really two separate items.
Okay.
Just give you an example. Everybody talks about China replacing their currency, replacing the dollar as the world reserve currency.
Right.
Well, we wrote a long piece and talked about this is not going to happen in our lifetime and gave a lot of reasons why. But the best example is when the dollar took over from the British pound. The U.S. GDP actually passed Britain in 1870. And the dollar really didn't gain hegemony over the pound until like 1944. So you're talking 74 years here. So it's a long-term structural global process.
So, given the fact that it's just taken that long to establish itself as the world's reserve currency, there's just a whole lot of life left in it simply because it is.
Yeah, well, and there's just a lot of good reasons. The depth of capital markets, as I said, by far the biggest defense provider around the world.
What does it say, though, about the U.S. dollar? And I found out this recently in a radio conversation with someone in Asia, talking about inter-country business being done between, say, Singapore and Vietnam, for examples. Those countries used to do business with each other in U.S. dollars. Now they do business with each other in their coin of the realm. They don't bother going to that third neutral currency. They're just dealing with local dollars or whatever they're called. Why would they take that step of stepping away from the U.S. dollar?
Well, sometimes it's easier if you have a very tight trading relationship with a neighbor and it's close, but they're usually small transactions that are very well defined. If you're talking about major capital movements, capital flows between borders, it's usually going to be done in dollars because you don't have the derivatives on the other side to hedge and do all kinds of sophisticated financial action when you get bigger monies in play. But these small trade deals, you're going to see that, and we've seen that again and again, China and Brazil, things like that. But it's not something that challenges the dollar on a global reserve basis.
We're talking about making money with the president and chief trading officer of Black Swan Capital. Jack Crooks is with us from Florida, and we'll be right back with lots more here on the Money and Wealth Show.
Always consult your investment professional before making any investment decision.
American Manganese Inc. has a world-class deposit in Arizona, indicated 6.7 billion pounds, inferred 8.9 billion pounds, potentially the lowest cost producer of electrolytic manganese. American Manganese Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at TalkDigitalNetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. Our special guest this week is Jack Crooks. Mr. Crooks is the president and chief trading officer with Black Swan Capital, here to talk to you about how to make money with, well, money. And Jack, money scares a lot of people. A lot of people say, regardless of whether it's your American dollar or our Canadian loonie or the British pound or any other kind of paper money, it's fiat currency. It's paper. And it's not backed by gold the way it used to be, and therefore ultimately has the potential to be worth about the price of a little piece of paper, which is nothing. So to people who might be interested in currency trading, which is your professional occupation, how do you settle them down about being scared by fiat paper money?
Well, the reality is the global system based on gold really broke down in 1914. So we've been running on a fiat type system really since then. We've had semi-gold backing. We've had the Bretton Woods system, which is a dollar parity system. So we've had, but basically the gold system broke down in 1914 when the central banks found out that they could create all types of credit in the world without the backing of gold, and the politicians decided they could use this credit to increase their power.
Okay.
So that's been breaking down for a very long time. The reality is a currency is still a store of value. It's still a unit of exchange. It's still all of those things it has to be in order to grease the wheels of global finance. You can't trade, you can't have a trading system without a currency, without a core currency. So regardless of what you think about it, and there's no doubt there's good reasons to be worried about fiat currency given what the governments are doing.
Well, sure.
You ultimately need that currency in order to, like I said, to have a global trading system. It's just a fact.
Let me pick on a currency that I know you're worried about. You're worried about the euro. Not necessarily the future of the European Union as a political outfit, but their money causes you some anxiety. Why?
Well, the structural setup of the Europe was initially flawed. It wasn't a common currency zone, for example. They didn't have cultures that were unified. They didn't have business cycles that were unified. They didn't have a common treasury. They have one interest rate for every business cycle in all those countries. And they also have very different efficiencies in their economies. It was a bad structural system initially, and it was created to try and bring the periphery economies up to German standards so they're able to borrow at below interest rates for a very long time. They squandered that money and never caught up with Germany, and now the dichotomy in the system is so great. We don't think those periphery countries can ever catch up to Germany. They would be locked into 10 to 15 years of deflation, and we think politically it's getting less and less viable that the system can hold up.
How does a person go about evaluating a currency with respect to, well, should I buy into this? Should I become a currency trader? Where do I go to look and see what currencies might make me some money?
Well, it depends on your time frames. If you're going to trade on a longer term fundamental basis, you want to understand what's going on in the economy, economic growth and relative interest rates. And this is a relative game. For example, the U.S. is in terrible shape if you look at the U.S. compared to what it's been. But it can be in very good shape compared to the stuff going on in the Eurozone. So you first have to consider it's a relative game. I mean, don't stay egocentric. But the primary long-term factors are economic growth and interest rates. Everything being equal, a country that grows faster and has higher interest rates is going to be a currency that appreciates over time. Now, of course, you get all these intraday wild movements where speculators and traders do a lot of things on these short-term news events. That's tough to trade in that environment.
Well, some people would say currency traders are part of the problem, in that these wild fluctuations that occur because, at least in part, because of political events or whatever, it's the currency traders that exacerbate the swings and make it more difficult for people to kind of see their way through and see the long horizon in any situation.
You're exactly right. And part of that is we're so news-driven ourselves each day. We're watching the news. Even the regular trader now is seeing financial news 24/7. If you step back, though, and look at the percentage that currencies fluctuate relative to other assets, whether they be commodities or stocks, the percentage that they fluctuate is much less. The volatility overall is much less than those other asset classes. The problem that it creates from a risk standpoint is people trade currencies with a lot of leverage. They give you a lot of leverage to trade these things, and that's where you get into trouble. If you step back and look at them as another asset class, do your homework, be disciplined, don't get too leveraged, and trade them for the long term. It's like any other asset class.
If the euro is causing you and your colleagues at Black Swan Capital a certain amount of angst, what's the opposite end of that spectrum, Jack? Which currency out there right now is giving you the greatest cause for, can make a few bucks here?
Well, if everything stays intact in China and they continue to grow, the commodity currencies, Australian dollar, Canadian dollar, because of what we just talked about. Higher growth relative to the other developed countries, higher yields relative to the other developed countries out there. So they're very attractive and they're appreciating accordingly. So if growth is maintained in the world, and China is part of the key, U.S. demand is also part of that key, the commodity currencies from the major developed world currencies will continue to go. From a long-term fundamental basis, we love the emerging market currencies. We would buy a basket of emerging market currencies and not look at them again for 5 years. And we're looking for, probably 15 to 20% annually we'd expect ultimately in those things.
And emerging markets, mostly South America, Chile, Brazil, those sorts of marketplaces with economies that are just really starting to warm up.
Right. We prefer the Asian bloc currencies just because they've been suppressed because of what China's doing, but all those countries too play a bigger role. We just think like the Latin American countries, South Africa, they're going to be a little more volatile. We think the Asian bloc is really the place to be.
Our guest this week on the Money and Wealth Show is Jack Crooks, joining us from Palm City, Florida. Mr. Crooks is the president and chief trading officer with Black Swan Capital. And we'll be right back with more.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Molycorp Gold Corp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer averaged 182 ounces per ton. Trading symbol MOR. Website molycorp.com. Or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. In conversation this week with Jack Crooks, President and Chief Trading Officer with Black Swan Capital, here to tell you at least a few tips about making money with currency. The Canadian dollar, Jack, we're kind of puffed up and proud of ourselves these days because our dollar is worth a whisker more than yours. Although a lot of analysts say the Canadian dollar functions best when it's below 95 cents, in the 92, 94 cent range. Why is the Canadian dollar at least at par with the U.S. right now? Is it because of fellows like you, currency traders, who are manipulating the marketplace and we benefit somehow because of it?
Well, I think it's more the long-term fundamentals in place for Canada. Number one, Canada, from a risk standpoint, did a very good job with their banks compared to the U.S. and all the other developed nations for that matter. Number two, commodities. Canadian dollar is a commodity currency.
Sure.
As commodities go up, it goes up accordingly. So you have that growth aspect from the commodities, and you have a general yield advantage over the U.S. dollar in Canada, slight yield advantage. So all those factors come into play. Of course, it's tied to China to a large degree. China is the driver of commodities, and as that demand stays firm, Canadian dollar, along with the rest of the commodity block currencies, as we refer to them, is fundamentally in better shape.
I want to talk about China, and I'm glad you opened that door for me again because we touched on it earlier. The whole matter of currency wars. The Chinese have pegged their yuan to the United States dollar. This is said to be manipulative. It's horrible. It's wrong. It's dragging America down. And by God, it's going to result in a currency war. What do you make of all of this? I find a lot of it, frankly, incredible, as in unbelievable. What do you make of it?
Yeah, I think you're right to a large degree because of the fact that China has manipulated its currency for a very long time and hasn't played fair in this game. They've accumulated $2.5 trillion in reserves because of the way they play this game.
Right.
Now, you hear this term currency wars because the other emerging market currencies are soaring in value precisely because China suppresses its currency. It's not a shooting war, and it's not a war at all yet. It really is a battle of global rebalancing, and the two main players are the U.S. and China. If that problem is solved, the rest of the problems will be solved. But it's a big problem. It's not going to be a currency war per se, but it could fester into major trade frictions, and that's bad news for the global economy.
Well, and it is said that the government of China is now trying to put the brakes on their rate of growth, Jack, because you can't sustain that. In fact, they're building office towers that have no occupants and shopping malls that have no customers. Right. They've just been going absolutely crazy, and they've got to put a halt, and not a halt, but put the brakes on it, slow it down. So that's not going to end demand for Canadian or Australian natural resources, but it is going to slow it down. Is that ultimately going to impact the loonie?
We think it is, exactly that. If one of the major reasons they're trying to slow down is this inflation concern in the background. That's always been created social unrest in China, runaway inflation, food prices. When the people in China can't eat, then they start really coming in, out into the streets, and they're definitely afraid of that. So if they try and suppress inflation, their natural growth rate will fall, and that will ripple through to the commodity currencies directly. And we think it will hit both the loonie and the Australian dollar.
Suppose I'm sitting in my living room watching this program right now, and the guy from Florida comes on and says, I really should think about making money with money. Something that has never occurred to me in my entire time as a wage-earning grown-up. How do I go about getting started? Where's a good spot to zoom in on how to make money with money?
Well, we would start from a long-term perspective of a vehicle, and that can be anything from a currency deposit account. You take your currency, put it in a bank, and then just convert it into another currency that you like for the long term. You're going to get paid interest rates, and the rate of interest in that local currency, and let it appreciate if it does, given your choice. The other vehicle is really a currency ETF for the person that wants to get started, an exchange-traded fund. We're seeing more and more currency exchange-traded funds out there. And it's a nice product. It trades just like a mutual fund and a stock, and it's very low leverage, and you can use your fundamental long-term analysis to buy these things and just hold them like you would any other asset class.
And do exchange-traded funds, or do some of the currency funds pay dividends as well? Do they pay you to own them?
In fact, they do. And most of them pay a monthly dividend based on whatever the yield is in that local currency.
So would your broker, even if your broker isn't a specialist in currency trading, would your broker or financial advisor likely have some basic information about this, and if you decided to explore?
Oh, absolutely. They're traded on the major exchanges around the world, so you should have plenty of information. And they track very, very closely to the underlying currency. We think it's a very good product for the person who wants to get started in currencies.
You mentioned leverage early, only a couple of seconds left. I got the impression you weren't too thrilled with people using high degrees of leverage to play currency trading games. That's pretty serious risk, isn't it?
Yeah, it's serious risk. You have to, I think, be in the game a long time to start playing with that type of leverage. And as I said, I think if you step back and do your homework like you would any other asset class, start with low leverage, use your fundamental analysis, use your technical analysis, all that stuff applies. You don't have to jump into the sports car right away. Learn to walk first and stay away from that leverage and understand how currencies trade. And then you can move up the leverage class if you're looking for home runs.
And we'll have a final word from our guest, Jack Crooks, after this.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Gold Ray Resources Corp. is developing a gold mine in China. Identified resource, 175,000 ounces of gold down dip to the south of an existing 1,500 ton per day operating mill. Resource remains open down dip into the east and west. Trading symbol GOR on the Venture Exchange. Website goldray.com. Or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
And now with a final word on today's program, here's our special guest, Jack Crooks.
Thank you, Sterling. One of the things I'd like to leave you with is the fact that there's a lot of scaremongers out there, and you hear a lot about the U.S. dollar disappearing, going away. The reality is the U.S. dollar represents about 2/3 of all central banks' holdings. It has the deepest capital markets in the world, the U.S., of course. And the U.S. economy is by far the most dominant economy in the world. The second place is China, and the U.S. is 250% the size of China. The U.S. has by far the strongest defense system in the world, so they're not going to be challenged from a capital market standpoint, from a defense standpoint, or from an economic GDP standpoint for a very long time. And the dollar is a necessary ingredient in the entire global trading system. So this idea that it's just going to disappear and some alternative, some unknown alternative that will take its place really is just hogwash. So I would like to leave you with that. Step back, do your homework, understand a little bit of history, and you can keep your money in your pocket.
All right, Jack Crooks, President and Chief Trading Officer, Black Swan Capital from Palm City, Florida. Thanks so much for being with us today. It's a pleasure to have had you on the program.
Thank you, Sterling.
Our thanks also to Fritz and the crew here at Churchill's at the Holiday Inn in North Vancouver once again for the hospitality. And thank you for joining us. For the Money and Wealth Show, I'm Sterling Fox. See you next time.
The Money and Wealth Show, brought to you this week by American Manganese Incorporated.